Hey guys, I'm David Mitchell, founder and CEO of TRADEway. What if God himself gave you a blueprint for how to handle your money? Well, the Bible is a practical book. Let's dive in and see what it has to say about wealth, about risk, about leverage, and about investing, and uncover how trading in the stock market can be a powerful tool for moving towards your biggest goals. We're so happy you're here. This is The Word on Investing. Hey guys, welcome back. Hey, if you found our show because you're really interested in the idea of trading in the stock market, the options market, but you don't think you got the experience yet, you're not quite sure where to start, well, we've got something awesome for you. We want to give you a free gift. If you go out to TRADEway.com/steps, you'll get a free video series called 7 Simple Steps to Start Your Trading. In this great series, we'll uncover some very simple things you can do to start your trading and to start right now. You don't need any previous experience to get started with this series, so just go out to TRADEway.com/steps and check it out. Hey, last week we were talking about the right way to deal with debt. Now, in a nutshell, what we talked about was you don't want to go out and pay all your debt off up front quickly, like the world tells you you have to do. You know, you've heard them say, okay, for most people, the best investment is to go out and pay all your debt off first. Well, that's not really the best advice for people that have skill sets. And remember, the best way to build strong skill sets in the stock and options market, including advanced option strategies, is to go out to TRADEway.com/memberships and check out our membership called Trader Pro. Let me say this, once you have skill sets, the last thing you would want to do, even according to Scripture, if you remember, we talked about 2 Kings chapter 4, last time, but even according to Scripture, the last thing you want to do is pay your debt off first. Okay, you don't want to pay the debt off first because then you've used all of your assets, all of your funds are gone, you're debt free, but you're broke. That's not going to go anywhere. So that's kind of what we talked about last time. And I told you that this time we'll kind of give you an example and show you why this is true and really a whole lot better way to deal with this. All right. So I'm going to go back and use an actual example. I'm going to go back to September 2020. Around September the 3rd, we had what we call a correction that started. So the market had been in a bull market uptrend for at least 3 or 4 months and a general bull market for years, really basically ever since Donald Trump was elected. It's been in the longest bull market we've seen in history. And it was still in this bull market, but it'll have little corrections. And one of those started around September the 3rd. All right. Now here's what's interesting. You don't really want to be jumping into what we call an up play where you would buy a stock or you would buy a call option, which is an option which makes money when the stock goes up. You wouldn't really want to enter a play like that if you're about to go into a correction. Well, how do you know if you're about to go into a correction if you're brand new to stock trading? Well, that's why Trader Pro is so important, because you're going to get a market alert every day where those of us who've done this for years, actually my family's done this for generations, we can tell you what we think the world events and the economic events of the day are causing to happen in the stock market and what the market might do because of that. So we call this market tone, and it's really, really important. Very few traders out there understand the importance of market tone, but news actually drives the markets. So you want to get in sync with that news and with what the whole market's doing when you do your play with your individual stock. So in other words, we're going to take an example with Costco. All of you have heard of Costco Wholesale Company, right? COST, that's their ticker symbol. And you've all heard of this great company. So what if you wanted to do a play with Costco? Would you want to jump in and buy a bunch of Costco stock if the market's about to correct and go down? Well, the answer is no. So let me give you some encouragement. If you were to go out to September 3rd and take a look at some of the actual market tone alerts that were coming out, market alerts is what we call them. If you actually go out there to September 2nd, before this started, the market alert on that particular day, I'm going to quote from it. It says, "This market is starting to feel stretched." Well, that's telling you that we're feeling like this thing has gone up too far and too fast, and it's just about to correct. It's stretched. It may not move up for very many more days. Well, we put that out the day before the market correction happened. And we said this, I'll quote from it again. It says, "Pullbacks would make trades easier at this point." In other words, we were telling all of our clients, that we feel like this market is stretched, and if it would actually move down for a few days, that would be better and make the trading easier because we would find a lot of stocks that would be back at good buy points. And so here's another quote from the 2nd of September, 2020. The problem is the foundation is shaky, and shaky foundations are hard to build on long term. And the quote went on and said, at some point we need a rest. The market usually cools off and provides entry points, but so far we haven't seen one for several days. This tells me to be careful. See, that information would be really valuable to you guys because it takes years and years to get good at market tone. You have to trade through bull markets and bear markets and bulls and bears for a long, long time to get to the point where you understand how the news is actually, affecting what the market's doing. There's a lot of fake news out there with regard to Wall Street, and you have to know that. So we help you with the market tone, and that's why Trader Pro is so great, because these market alerts are going to let you know, hey, you know what? Sometimes it's better not to be trading. You should just be in cash because the market's kind of squirrely. So when the market's not even predictable for those of us who have done this forever, maybe you should be in cash like we are. That's why this kind of information is so valuable. So just check it out at TRADEway.com/memberships. So we were talking about this the day before this correction. Now, if you know how to read a chart, go out and look at the S&P 500 on September 2nd, 2020. It was still moving up. And we were telling people, don't get in up plays. We were telling people things like this. I'll give you another quote. We have seen many a September in years past be negative for the market. Now see that we're saying that the day before this market crashed, and we're telling you, hey, maybe you shouldn't be getting in up plays right now. You should just go to cash because it's not a great trading environment. And so that is really interesting. We went on and said, with that said, a pullback for an easier entry would be very welcome by all of us at TRADEway. This market needs a rest, as any entry now feels like we would be chasing the market. It's hard to make trades work when you have to chase the trade. Now, see, that would be great information to have on September the 2nd when the market crashed starting on September the 3rd, right? Now, on September 3rd, if you go out and you look at the market alerts we sent out, it says, if we see today close down on higher than average volume, then we may be getting a larger move down, but we will have to wait and see. So that, that's kind of saying, look, not only is it moving down, but it may move down farther. And then on the 4th of September, we said, well, we got our exhaustion move after all, and the drop down yesterday was not unexpected. It is what we have been waiting for. Now, listen, what if you're a brand new trader? Would you have known how to read all the news that's out there and interpret that to tell you, hey, the market's about to go down. Maybe I shouldn't be getting in an up play right now. You probably wouldn't know that. And so this is so great to have these market alerts that come with Trader Pro and really, really kind of have, it's almost like you've got, 30 years of experience when you really don't have it, because you've got those of us who do have it writing these articles for you. On September the 7th, we had an amped alert that went out. Now, this is for our clients that were doing longer term trades. We said, we recommend staying in cash Friday as the market did not hold the 20-day moving average. So we had our clients in cash, and we were telling them to stay in cash. Don't be in the market right now. And then by September 28th, the market actually ended its correction and it was starting a new uptrend. So you could have known all of this through the market alert emails, but also we teach you how to read the chart. You will actually learn how to read the S&P chart and see some of these things for yourselves with time. So the S&P 500 chart and the stock that we are looking at, and in this example, we're going to look at Costco, C-O-S-T is the ticker symbol, and both of them indicated a good entry point for a new move up on September 28th. Now, of course, all this would be more meaningful if you could actually see a chart. But when you go out to TRADEway.com/memberships and you sign up for Trader Pro, during the very first course you take with that membership, you'll be able to visualize and see these charts and learn how to do the charting and get really good at it. And that's so exciting, and it's fun too. So anyway, on the 28th would be when you would start thinking about, well, maybe I could jump back in the market now. And you would have had email alerts telling you that it looks like the S&P correction is over. We have moved up above the 20-day moving average on higher volume, et cetera, et cetera. All those kinds of alerts were going out, telling people now you can be looking at some of your favorite stocks. Well, some of us were looking at Costco right at about that time. And on the 28th of September, 2020, the stock pulled back up above a key moving average. It happened to be the 20-day moving average. Every stock may pick a different one. They're either going to pick the 10, the 20, or the 50. But this one liked the 20, and you can go back for well over a year. It would move down and hit the 20-day moving average and then bounce up, which meant that's a good buy point, right, as it bounces up off that moving average. And this is what had happened on September the 28th. So it actually bounced up off that moving average on higher volume than average, which shows you that the big boys are jumping in. The big boys on Wall Street are jumping in and starting to buy this particular stock again, which helps to propel it up. So it was a great buy point. And so this is what we could do. Now, this stock on that particular day was worth $344 per share. So in this example, I want us to buy 1,000 shares of the stock so we can kind of see what would happen. Let's say we were $34,000 in debt, and we heard some dude on the radio said, what you need to do is just pay your debt off right now, take all $34,000 and pay it off and be debt free. So you didn't have any money. So then you wouldn't be able to do this particular play, right? But let's say you didn't do that because you had listened to this podcast. And so you didn't pay the debt off. You said, well, I'll pay it off later, but I'd rather pay it with Wall Street's money and not give all the money I have to the bank today. See? So let's think about this though. For 1,000 shares, what would it cost you to buy 1,000 shares if the stock's at $344 per share? Well, that would take $344,000, which you don't have. We're assuming in this example, you got 34,000, right? So a lot of us wouldn't want to invest $344,000 in one stock at any given time, right? So if you have the Trader Pro membership, the reason it's so important, it teaches you how to trade options. And when you learn how you could buy a call option rather than buying the COST stock, you can actually, usually a good rule of thumb is the call option would be about 1/10 the price to control the same number of shares. So think about that. If you knew how to do the options, then for $34,000, you could get 1,000 shares controlled under your control. Is you don't actually own the shares, but it's like you control the shares. And then later, if the stock moves up like you think it will, you can sell those options and you end up making the same money you would have made if you could have bought that much stock. Now, so what's that telling you? You're making the same money you would have made if you'd had $344,000, but you only had $34,000. So you're leveraging your money. And in this case, in this example, every dollar you had in that account is worth about $10. So you were actually able to control 1,000 shares for about $34,000. And we're assuming you didn't use that to pay the debt off. You kept it and you did this particular trade with it. Now, the options market has existed since 1973, and I graduated from high school in 72. So that's how I remember the year. But I began to study options when I was in my early 20s. So pretty soon after the options market was invented or existed in the United States, I began to trade options. So our family's done this for a long, long time, as long as anyone's done it, basically. And we've traded stocks for over 4 generations. So all of that knowledge is behind our programs, all the things you can get involved with TRADEway.com. And we got together. I've got 5 grown children. They all work with us in these companies. And we got together a little bit before 2015, really, a couple of years before that maybe. And we decided, why don't we begin to share these skill sets that our families had for 4 generations with our brothers and sisters in Christ around the country. And it has been a fantastic trip. I would say we've helped thousands of people to learn these skill sets. So now look at this. Now you've learned how to have leverage. Every dollar was worth approximately $10, and you were able to control $344,000 worth of stock with only $34,000 because you knew how to do options. And now you're actually using the funds that you have because you didn't pay the debt off yet. You use that money to get into this play. So with options, you gain leverage. Each and every dollar has the potential buying power of anywhere from 7 to 14. In this particular example is around $10 that each dollar had. Imagine that. The call options cost roughly a tenth the price of the stocks in many cases. I mean, it's different for everyone, but that's kind of a good average. But they allow you to control shares of the stock as if you owned it, and later you sell the call option when the stock moves up, and you would end up making the same money as if you had bought the stock and then sold it, only you control way more shares than you could have if you'd bought the expensive stock. Does that make sense? So think about that. So you buy 1,000 shares of the call options of Costco, C-O-S-T, on 9/28. Now remember, with Trader Pro, you'll learn all about options, the right way to trade options, the right option to purchase at the right time to get the math on your side. So the cool thing about Trader Pro is it shows you how to go shopping for options, so you know which ones you should be looking for. And so now, let's say that we're in this particular stock now, or we actually own 1,000 shares of these options, and by 10/14, the 14th of October, the stock had moved all the way up to its old trading range and hit the resistance line. And remember, with Trader Pro, in the very first course you go through, you'll learn how to draw these support and resistance lines. It shows you exactly how to draw them like the pros do it. And you'll see these things. It's a lot of fun, by the way. Your kids will love it, and they'll probably be better at it than you are. So now we see what happens is this particular stock went all the way up to what we call the resistance line and bounced down a little bit, and that is a sign that it's a good point to sell the options. So at that point, we sell and we take our profits. So by that time, the stock was up around $380 a share. Now remember, we bought the stock options when the stock was at $344. Now it's at $380 per share. So we gained about $34 per share profit on the stock. And you'll learn that there's a thing called the delta. Don't worry about what that means right now, but it just means it shows you as the stock ticks up $1, how much will the option make? Because they don't make exactly the same. But remember, you got 10 times the number of shares. So you end up making more money, even though it doesn't go dollar for dollar. So that delta will show you how much. Well, in this case, this particular example, if that stock went up for about $34 profit, the option would have moved somewhere between $17 and $20 per share, probably more around $20 per share is what you would make in profit. So, the play only lasted 16 days, and you just made $20,000 profit in this example in 16 days. Now, if you do the ROI calculation, that's a 58.82% return. Now, imagine if you had the skill sets to make 58.82% on a play that only lasted 16 days. Now, that's not per year. You're used to seeing returns on a per year basis. Like, let's say the bank pays you 2% on a CD. Well, that's for a whole year. This was for just 16 days, and it made 58.82%. And if you annualized it, it would actually be 1,342% annualized. That means if you could do this play or one like it with another stock that moved up about the same amount every 16 days for a whole year, you would turn your $34,000 into $456,280. Now, what if you had paid the $34,000 to pay debt off and you had zero money to do this? See my point? Now, let me ask you this, though. In real time, in the real world, do you think you could really do the same play every 16 days for a whole year with no losses? Well, the answer is no, because you're going to have about, on average, 4 corrections a year. If you happen to be in one of these when it corrected, you might stop out and actually lose money. So you're not going to make $456,000 doing this, because it's for one thing, you can't do it every day for a year. Another thing is you're going to have some that didn't go the direction you thought they would, and you'll stop them out and have acceptable expenses. And so you take an expense from time to time, and knowing that we have about 4 times a year when we have corrections, that tells you also there's at least 8 weeks out of a year, because these corrections last, a couple of weeks to 4 to 6, 8 weeks. So you're going to have quite a few times out of the year when you shouldn't even be trading anyway. We call that a squirrel market, about 4 times a year for 2 to 6 weeks. So you're not going to be able to do that trade every day for a year. So why do we even teach you to annualize it 1,342%? Well, for one thing, that's how you compare. Let's say you had 2 different stocks. You had another one like Costco that was pretty good. It had a good pattern. It looked great. How would you know which one of the 2 to do if you only had enough money to do one? You would have to annualize. Cool thing about it, you can estimate what the return is before you do the play, before you put any money in it. So you would estimate the ROI on these, then you would annualize them both, because if they're not both $340 stocks, let's say one of them's $340 and one's an $80 stock, then you're not comparing apples and apples unless you annualize it. So you annualize it so you can tell actually which one of those two stocks you would get into. But it's kind of a fun number to look at. I mean, it's not that you think you're going to make 1,342% return in a year, but that one play you did was worth that in a sense, because you accomplished a real return of 58.8% in just 16 days. Now, you weren't even aware that's available probably until you heard about this podcast. And so once you see that God's put that on the shelf for you, that you can actually learn to do that for your family and have that kind of potential, it's life-changing. So what if we didn't, what if in a year we didn't do that well? We didn't make $456,000, but we only did half that well. So we turned $34,000 to $228,000. Would that be pretty good? Well, what if we only did a fourth as well? So we turned $34,000 into $114,000 a year. Would that be okay? Or what if all we did was double it? So you turned $34,000 into $68,000 a year. Would that be okay? But any of these possibilities that you actually accomplish would be better than if you took all $34,000 and just paid your debt off and had no money to trade with, and you missed these opportunities. That's my point. So my point is, when you have skill sets to do things like this, then you have leverage. And when you have that kind of power, that's when it doesn't make sense to pay your debt off immediately like the world says to do, because you now understand the right way to trade stocks and options, and you have the potential to earn larger returns than people out there that don't have these skill sets. So maybe for them, it is better to pay the debt off because they don't know how to make money with their money. But when you have the potential to make money with your money, you want to take the money you have and multiply it, and then take the new money that you got from Wall Street and pay the debt off later. So you postpone the payment of the debt. So the idea that the best strategy is to pay off all your debt first makes little sense when you have these skill sets. All right, now think about it. If you owed $34,000 and you paid it all off from day one and you have no assets left to multiply, you just gave up all of the potential for making this money that you could have made. And it is true that it takes money to make money. So you paid off your debt and now you're broke and you have no money to make money with. So now you have to go borrow some money in order to make some money. Does that make any sense? That doesn't make any sense, does it? So the whole idea is that when one has skill sets, you begin to think differently about debt reduction. The world says the best investment for most people is pay off all their debt first. The Bible actually says you should use the assets you have to gain return and earn funds, and use those funds to pay the debt off later rather than sooner. Remember, that's found in 2 Kings chapter 4. Read it. It'll blow your mind. So stall the payment of the debt, use your assets to gain funds, then pay the debt off, in this case with Wall Street's money. Listen, everybody goes to business school. What's the first thing they learn? They learn if you own a business, you want to slow down the outflow of the money and speed up the income. You pay your debts as slow as you can legally do it. Well, even the Bible says that. So maybe that's an eye-opener for some of us out there today. I hope it is. And remember, if you enjoyed this, please rate and review it so that people of like mind with us might find it and be a help to them and their family. We enjoyed being with you today. We'll see you next time.